Hi everyone, thank you for visiting my channel Stocks Current Affairs, where we'll discuss interesting stocks for long-term investments. In this video, I'll share insights on India's largest amusement park chain with over 2 decades of successful operations, Wonderla Holidays Ltd. It is the owner and operator of 3 amusement parks in Cochin, Bengaluru and Hyderabad. It also owns and operates a 3-star luxury resort with 84 keys in Bengaluru Park. It opened its first park in Kochi in 2000, previously known as Vega Land. All the parks are within proximity, less than 30 kilometers of the major city. Let's talk about the company's amusement parks in 3 cities. Kochi. Wonderla opened its first park in Kochi for a capex of INR 650 million. The total land available is 93 acres and the park is spread across 29 acres of land, leaving over 64 acres of land for future development. It has over 54 rides, out of which 33 are dry rides and 21 are wet rides. Bengaluru Park. Wonderla opened its second amusement park in 2005 in Bengaluru. The park required a capex of INR 900 million. It has over 60 rides, out of which 39 are dry rides and 21 are wet rides, and a resort of 84 rooms inside the premises of Bengaluru Park. Wonderla Bengaluru is spread over 82 acres of total land, out of which 39 acres is developed. Hyderabad Park. The company opened its third park in Hyderabad for a total capex of INR 2,500 million in 2016. The park is spread across 27 acres with over 23 acres of additional land available for future development. It has 46 rides, out of which 28 are dry rides and 18 are wet rides. According to Google Trends data, Wonderla brand's score in terms of interest from potential customers is more than double when compared to other large amusement and theme parks like SL World, Imagica, Worlds of Wonder and Ramoji Film City. Interest for Wonderla brand is very popular in northeast Indian states such as Tripura, Manipur, Assam, followed by South Indian states such as Andaman and Nicobar, Kerala, Puducherry, Tamil Nadu and Karnataka. Now let's talk about its stock price and key financials. Wonderla is a small cap company with a market capitalization of 3,612 crores with a stock PE of 21.4. Both ROC and ROE are in double digits, 22% and 16.4% respectively, which is very good for a small cap type company. Sales have increased quarter on quarter between March 2023 to June 2023 by 87%, and year on year, that is June 2022 to June 2023, it has increased by 24%. Look at the awesome operating profit margin touching 63% in June 2023 quarter, showing the company is managing its expenses aptly. Net profit has also on a positive track both YOY and QOQ. Wonderla has recovered from the repercussions of COVID-19 and you can see the change in sales, operating profit and net profit continuously increasing and making new highs. The company has increased its reserves which can be used for further development of parks. It has kept long-term and short-term borrowing near to zero. Balance sheet looks clean and dependable. Hi viewers, I put a lot of efforts in making this informative video. Request you to subscribe to my channel, that will motivate me to create more such content. Now let's talk about key future prospects. Growing Indian amusement park market and huge opportunity for growth. The Indian amusement park industry is still in its infancy. IBEF estimates that the market for amusement parks in India was worth INR 40 billion in FY20. It is predicted to grow by 10% per year through FY27. There are more than 125 districts in India and they are home to more than 3 million people. With Wonderla being the sole pan-India player, there is a significant scope for expansion given that there are only 15 to 20 big parks in India with foot traffic of over 0.5 million per year. Other significant reasons encouraging the growth of amusement parks in India are favorable demographics, a dearth of on-door leisure and growing GDP per capita. The administration intends to increase the number of parks. By FY30, management hopes to run 10 parks. In FY20, Wonderla operated 3 parks with a total yearly visitor figure of more than 2.4 million. In the following 3 years, the company plans to construct 2 additional parks, one in Bhubaneswar, estimated cost INR 1.25 billion, and one in Chennai, estimated cost INR 3.3 billion. According to management's projection, Bhubaneswar Park would begin operation in Q3 FY25 and Chennai Park in Q1 FY26, pending state government consent. Rising average revenue per user. During FY23 to 26, the average revenue per user is anticipated to increase by 7% CAGR. Over the previous 10 years, Wonderla's average revenue per user has grown significantly. The company's ARPU increased by over 10% CAGR from about 400 rupees in FY 2009 to 191 rupees in FY20. Strong brand equity is working in Wonderla's favor and mitigating any price increase. The management increased prices many times in FY23 and the ARPU is anticipated to reach INR 1,227 rupees. Expected rise of footfall. The current Wonderla Park can accommodate between 10,000 to 12,000 visitors daily. However, the average daily visitor count in FY20 was just 2,172, yielding a usage rate of only 18%. By implementing tactics like dynamic pricing, add-on park activities, a switch to digital marketing, and the use of data analytics, the management hopes to increase the number of daily visitors and achieve an average of more than 4,000 per day. The corporation has also launched several campaigns and lucrative events like Women's Day, Navratri, Sunburn Festival, New Year event, etc. As part of the add-on park events planned to draw crowds after regular park visiting hours for an extra ticket fee. The firm targets 2 large events each month at the current parks, and this strategy has helped to increase footfall, traffic, and ARPU there. Footfall is anticipated to increase at a 17% CAGR between FY23 to 26, with an emphasis on increasing foot traffic in already existing parks, the development of 2 new parks by FY26. Shift to asset-light model. The firm intends to build 2 more amusement parks in Bhubaneswar and Chennai by FY26 in order to meet its long-term objective of operating 10 parks by FY30. Procurement of land for park development accounts for 39% of the cost, and amusement rides account for 42% of the cost. So these 2 components make up the bulk of Wonderla's capital expenditure during the construction of amusement parks. The Bhubaneswar Park would operate under an asset-light approach, with the Odisha state government leasing the property for an affordable price and a long time in order to encourage tourists. All upcoming park will adhere to same asset-light concept the management has emphasized. This would let the firm serve a bigger audience with a value-based product and lower the upfront capex cost by about 40% due to the savings on the land expenses. Manufacturing plant on site, reducing cost. Wonderla constructs several of the rides for its amusement park in a special manufacturing plant in Kochi. As of FY22, the factory had developed more than 42 of more than 160 rides and attractions to the company's 3 operating parks. At the Kochi production facility, the organization has a group of competent employees. The cost of domestically made rides is 1/3 of that of imported ones. Additionally, Wonderla purchases used rides from amusement parks all over the world, refurbishes them in its factory in Kochi, and then installs them in its park. This is a huge competitive advantage since it enables Wonderla to maintain equipments internally, minimize downtime, expenditures, and operating cost while saving 50 to 70% of the cost of rides. Due to its own ride production facility, Wonderla has reduced maintenance, capital expenditure requirements than its competitors. Conclusion. Wonderla Holidays Ltd stock has given a run-up of 88% in last 1 year and has priced in the good financial performance disclosed. The future prospects are great with rising disposable income and growing expenditure on leisure and entertainment. The stock can perform well in future on the backdrop of rising capex to build more Wonderla parks. Investors may keep this stock on their radar, and a phased investment approach with small quantities may reap benefits. Thank you for watching my channel. Please subscribe as it will motivate me to create more such content. Thank you.